what are your damages, and how much money can the insurance give it to you. Okay, so this is built around insurance, and again, these are prediction models. So what you need to understand is some bit of AI, like how machine learning works. How do you train a machine learning model, and how do you predict outcomes? Like any one of you has any experience with designing models in machine learning? Any experience? Like, come on, you can just share anything with me. I'll be happy to listen to any exposure that you guys have in machine learning, because it's a very niche technology which all the fintech companies are looking for. Even small primary knowledge that you have in writing machine learning algorithms or just creating machine learning models is very helpful. Like anything, I just want to hear from any one of you if you have worked on any projects which involve machine learning or any AI models.
Come on,
So,
students, you can talk
hi,
about your internships in machine learning.
hi, I'm audible.
Yes, you're audible.
Yeah, so I have created some models.
Mm-hmm.
Not the thing is okay. So the thing is, I'm not good at coding. So there
Mm-hmm.
are various applications like Lobe AI where you
Mm-hmm.
can create ML models, right?
Agree,
Like
agree,
using OpenCV.
agree.
So
Yes. Mm-hmm.
what I had done is I had created some models which
Mm-hmm.
can identify like type of damaged areas. Then I
Okay.
tried to use the same technique on cars. I was able to do that.
Oh,
Okay.
perfect.
So
Mm-hmm. Mm-hmm.
so it can just what do you say? It can just mark the squares of where the car is damaged. But
Okay.
tell me one thing: how
Mm-hmm.
can you predict like what amount of insurance does the company have to pay to the what do you say to the owner?
Yes. Mm-hmm.
How can you predict that? Because it depends upon the type of car, the type of insurance he has, the type of damage that is done, or it we have to also take it under consideration that if the damage is under insurance or is it covered under insurance or not. So how are
Yeah.
you managing everything?
Yeah, perfect. That's a very valid question. So the first primary thing for a model to predict is it needs to have a very rich training data set. Okay. So to predict, again, very valid point you said. How does it know which car it is? How does it know how much damage it has caused, whether it is under the insurance or not? So this goes to the model as a training data set. So we provide a model with more than, I think, 5 million training data set. So it tries to learn from all the previous accidents which has happened in past over the 10 years, and it tries to identify patterns. So if you know about the linear regression algorithm, so of course, so there are various algorithms that are written to basically map your history data to what it will predict. Of course, the predictions are not always accurate. Okay, so prediction is, so that's why I said, so why I said we use prediction in insurance is it's not a critical use case. Okay, we can use such kind of prediction models in insurance. We can use them in real estate. Okay, we can use them in data and analytics. Okay, but never, we cannot use AI models in payments. We can never use them in forex. We can never use them in capital markets. So this is one very major thing which fintechs deal with. A lot of money is invested into capital markets and the research. We'll go into that. But yeah, so predictions are not always accurate. They are just based on your history data. So if you just provide a training data set of say 10,000 records, your prediction will be absolutely wrong. Okay, it will not be able to identify the car, it will not be able to identify the damage. Of course, whether it is covered under the insurance or not, there are various parameters that basically decide these factors. But yeah, so machine learning is used in non-critical use cases. Okay, not into the use cases wherein you deal with payments, forex, they are used, but there is of course the second level of governance that is applied. So whenever a model predicts, so how it is used in payments is, I'll give you a use case. It is used in fraud detections. Okay, so people, what happens is people try to establish a shell company. Shell companies are nothing but fake companies that do transaction on someone else's behalf. So in such scenarios, there are AI models that basically trace the source of the money, like from where, what is the source from where this money originated, and if it tries to find a broken link between the source of the meaning the source from where the money originated and the destination where it is supposed to be transferred, it just raises a flag. It will not stop your transaction. Okay, it will just raise a flag to any entity like ICICI or HDFC Bank. It will just raise a flag saying that, okay, this transaction has some issue, but your transaction will go through, but it will raise a flag and people will try to investigate this transaction. So that's why sometimes you see whenever you do a high value transaction, if you do a transaction for 50 or 60,000 rupees on your credit card, immediately you will receive a call from HDFC Bank, okay, asking you whether you have initiated a transaction or not. So these happen using AI models. So AI models are used to detect anomalies. What are anomalies? Anomalies are something that a spike in your normal data set. Like doing a 60,000 transaction is a spike. Okay, not everyone does a 60,000 transaction on a day-to-day basis. So if there is a spike, the AI models are deployed to detect such spikes, and immediately you get a call. So
Hello.
yes, tell me.
Why do you need a AI model just to detect like if it's a 60,000 transaction? Because you can just set a upper limit, right? Like let's say above 50,000, if the transaction happens, you
Yes.
can make a call.
Very valid question. So you can make a call, but see, why do we use AI? Because AI has an intelligence to detect whether 60,000 transaction for you is a spike or not. Say for example, if Anil Ambani or Ratan Tata does a 60,000 transaction, it will not raise a spike. Okay, because the AI model knows the background of that person, because it knows various parameters. So you provide various balancing parameters or various inputs to a model with a particular entity. Okay, so it will not raise a flag for everyone. It tries to analyze the background of a person. If the person is constantly doing 60,000 transactions, it will not raise a flag for him. It will just to give you a simple use case where everyone is familiar, Google Map uses AI to predict, to show whether a road has a, meaning Google Map shows you whether it's red. I think it uses a color like orange wherein it's less traffic, and blue means there is no traffic. Do you know how Google Maps tries to identify these colors to be shown on the road? It uses AI.
It takes internet of like the people who are in the traffic. It
No,
checks.
no, not really. So if you come to Bangalore, okay, so in Goa, if there are two cars that are standing on the road, it will show me as orange, saying there is some traffic there. But in Bangalore, I have around 50 cars that are stuck on the road, but it still shows me blue. It tries to identify the patterns. Okay, it tries to identify patterns. It knows Bangalore is crowded. 50 cars in Bangalore is normal. So this machine learning algorithm identifies a pattern. Okay, and it says, okay, this is normal. 50 cars on a Bangalore road, they are blocked. Normal, it's blue. Okay, but for Goa, if there are 2 or 3 cars on the road, it will say it's orange or red, because the algorithm detects that this is not normal. That's why you need AI to raise these spikes. Does it answer your question, or
I have
still confused?
I have a following question to Prem's question.
Okay,
Like,
okay.
okay, it's understanding that you can use AI, but is there a there could be a limit, right, to how much AI can, what do you say, look into? Because for example,
Mm-hmm.
um, um, AI for one person is okay, but if you want to implement the same model for multiple, what do you say, thousands and lakhs of customers, won't
Mm-hmm.
it just be an overhead for the bank to operate the AI?
It is see, it is the same. See, we don't deploy different models for different persons. Okay, it's the same model, same model. Once a model is built, right? How a model is built? Model is built on the training data that you provide, the historic data. Once a model is built, the same model is deployed for each person. Just the parameters that go into the model are different for different persons. But yeah, of course, the model needs tweaking. Why do I say tweaking is, say for example, you are rich for 4 years, you are a politically exposed person, but from the fifth year onwards, you are no longer a politically exposed person. Okay. Now these AI models are not able to detect such granular levels of anomalies. Okay, so model needs to be tweaked. Yeah, of course, to answer your question, it becomes a overhead at times. So yeah, AI should not be used just in all use cases. Only use cases which are difficult or which has like millions of transaction per minute, per second. That's where, so the data which is difficult to be read by normal programs like say Python or Java is not able to process like millions of record in 1 minute. In such scenarios, we normally go for AI or big data kind of approaches. Okay, clear? Does that answer you?
Yes.
Okay, okay,
And what
okay.
about a new user? If like I'm a new user to your
Mhm,
like I've just got a credit card, how
mhm.
will the AI will know like what is the spike?
Yeah,
Let
so it's not like you are new to us, you are new to the bank, okay, but you are not new to the world. Okay, all your data is tracked, all your data, all your previous transactions. Say if you have used Google Pay or if you have used so there is a concept called as KYC. Okay, so KYC is central. KYC is managed by RBI. So RBI keeps a track of KYC details. So you will have history with one or the other bank, and at at a SEBI or a RBI level, we'll talk about SEBI in capital markets. So SEBI and RBI, they basically keep a track of all your chains in something called as a blockchain mechanism. So your chain is created whenever you do a transaction, any online transaction, any footprint that you leave on the internet is added to your blockchain. Okay, blockchain is nothing but it is just a sequence. So each person has a chain. Each person has a change in the in a block model. Okay, so all your footprints are basically tracked, and whenever you go to a new entity, they basically try to acquire your footprint from other organizations. There are organizations that basically work just to provide this data. Okay, so doesn't Google doesn't analyze all the data that it stores. It tries to sell the data to companies that basically analyze for you. Okay, yeah, it's bit it's bit more on the how would I put it, as like for example, how Donald Trump won the election. They say there was one AI company in Europe that did all the statistical modeling for Donald Trump to figure out which particular set of population will vote in favor of him and which particular population will not. So they came up with some models to predict all this before the elections. So there are companies
Cambridge
that,
Analytica.
sorry.
Cambridge Analytica. Are you talking about Cambridge
Yes, yes, yes.
Analytica?
Yes, Cambridge Analytica. So there are companies that basically take your data from all these online players. Like Google is one online player. You do Google searches each and every day, but all your Google searches are basically indexed. And Google doesn't do anything with your data. It will try to sell your data to some entity that will do analytics on top of it. And these analytics is in turn sold to fintechs. Okay, and based on this data, fintechs will try to come up with algorithms that will either flag you somewhere, or that will say, okay, you are not eligible to apply for a loan. So there is a lot of processing that goes behind in a fintech company. So it's quite crazy, in fact. So working in a fintech is not just a 9 to 6 job. Okay, it will basically fascinate you at what level they use technology to come up with very small kind of analytics that determine a behavior of a customer. So this is about all these particular things. The very important part where fintechs operate is into capital markets. Okay. So any one of you, I just want to understand if anyone understand what is a share market and how people try to invest in a company and try to make profits from it. Anyone of you tried investing in
It
stocks?
is just demand and supply. Basically, there is an exchange and there are brokers, and the brokers are connected to the server of the exchanges, and the order is placed from the broker side, and the orders are matched, and then the transaction goes through.
Perfect. Yeah. So that's in the simple term, that is how it works. But yeah, I'll just I think I have one more slide for capital market. This is on blockchain. We can skip this. So blockchain is nothing but, see, as I told you, whenever you create any footprint is added to the chain and it is propagated. So this is about it. Let's see. Yeah, capital market. Let's try to understand more on capital market, because lot of companies invest heavily on capital market. I'm not saying invest in the technology that goes behind this capital market. Lot of AI models that predict which company can make profit, cannot make profits. Okay, so capital market is simple. Okay, very simple. Say for example, you have a small business. Okay, and you want to expand your business, you need money. Say for example, you need 2 crore rupees. Okay, so where can I get this 2 crore rupees? Okay, of course, the first thing is you go to the bank. So banks can just lend you 2 crore rupees, but it's not easy. So banks charge you high rate of interest. You need to fill some tedious paperwork. The bank will do some scrutiny. Bank will ask you, why do you need 2 crores and all these things. So this is the first is you can get from bank. Second is you can go public and get listed on a stock exchange. Okay, you can just say, what do you mean by go public? Means, say for example, you have a company and you want to raise a money, you will have to let go of certain part of your company. You will have to say, I am selling 30% of my ownership in this company to public. So and you, again, there is a valuation that goes through. So SEBI is the one that regulates this particular listing on the stock market. So SEBI will basically decide the valuation for you. It will check, it will try to validate whether the valuation that you have come up with is accurate or not. So you can sell, for example, 30% of your stake in the company to public, and you can list it on stock market. So let's try to understand how are capital markets divided. Okay, so capital markets are basically divided into two parts. One is a primary market and the other one is a secondary market. Okay, so primary markets deals with the newly issued equities. Equities are nothing but it's a share. So share is nothing but it's just a small part of your company. So if you own a share, that means you are, say, 0.001% owner of that company. Okay, your decision matters. So they have this board meetings, they come up with decision, they will ask you for the vote. So your decision matters in that company. So this is how you raise these new equities. And there is something called as bonds. Okay, so bonds are so bonds are more secured. So whenever you come up with a bond, you say, I promise you to give a 5% interest on this much amount of the share that I'm selling you for a company. So bonds are fixed assets, fixed period of time, whereas equities are more liquid kind of asset, and equities fluctuate. So equity markets are decided every second. Every second the price of equity changes, but that's not the case with bond. So secondary markets are nothing but they deal with old bonds and old equities. What are old? Old is nothing but whenever a company is not listed, you can still go and buy a particular section in a company. Okay, say for example Zomato was not listed, so Zomato is listed just recently, right? So there is a IPO that is floating around for Zomato. Anyone heard about Zomato IPO?
Yes.
Yes.
9,000 crore IPO.
Yes,
Yeah.
exactly. So Zomato IPO is listed, but people have invested in Zomato long time ago. Okay, so there are people who have invested in offline markets. So when such people are trying to sell their old equities, they are listed into secondary markets. List those equities in secondary market. So this is just a rough classification, okay, of how the market works. Okay. So in these equities, there are more categories. Okay, equities are not just stocks. Okay, so let's take for example this trading instrument as equities. Okay, so equities are not just stocks. So equities have lot of other things. So we have something called as an exchange traded fund. Exchange traded fund are nothing but it is a collection of different stocks. Okay. For example, you have an exchange traded fund for Sensex. You have an exchange traded fund for Nifty. So what is Nifty? Nifty is like the top 50 companies comprises of Nifty. So exchange traded fund is for Nifty, and you can basically trade this exchange traded fund. So the company that you guys are having, the Indus Valley Partners, they basically deal with private equities and exchange traded funds. So they try to create a fund. Of course, these exchange traded funds are listed by different organization, but Indus Valley Partners is one of the organization that come up with exchange traded funds. Okay, so these are various categories. Stocks are nothing but individual unit of a company. Exchange traded funds are like series of company, like 3-4 companies comprises of one fund. Okay.
No, I had a question regarding the
Yes.
ETF.
Yes,
Okay,
tell
so
me.
Indus Valley Partners, as in they make the ETFs and they list, or they make ETFs for the other companies, like they track, basically backtrack all the data and then sell the ETF to other companies.
No, they list, in fact, Indus Valley Partners can create a exchange traded fund. So they deal with Indus Valley Partner deals with two things. One are the hedge funds. Hedge funds is nothing but a combination of lot of things. Okay, say for example, I have around 50 lakhs with me. Okay, I don't want to lose my money. If I just go and invest 50 lakhs in stocks, after 2 years, if I go to see, my value can become 30 lakhs. Okay, it can go down and it can go up. So the best option is to invest your 50 lakh with some hedge fund management company. Okay, so hedge fund management company, one is Indus Valley Partner. So they manage your fund. Okay, so what is a hedge fund? Hedge fund is nothing but it's a combination of all these things to make you profit. So just investing in stock will not make you profits. Your 50 lakh will become 30 lakhs because there are some companies that will go in loss, some companies will shut down, your money will vanish. Okay.
My question was actually like the ETFs, they have some ETFs listed on the stock market.
I'm not sure if Indus Valley has ETF listed on stock markets. No, I'm not sure. So ETFs are more global. Like for example, what I know is we have ETF for Sensex, and these are listed by Nippon, SBI. All the bigger partners do that. I think Indus Valley more they deal with the hedge funding, and they deal with private equities. Yeah, I don't think they have their own exchange traded fund, but yes, of course, if they have the license, they can create their own exchange traded fund. No, nothing is stopping you from doing that. Just that you need a license to create this funds. But what they will do is they will create a portfolio for you that basically has 10% of stocks, 10% of exchange traded fund, future contracts. Like what are these future contracts, forward contract, options? So these are nothing but this is just like gambling on top of stocks. Okay, what do I mean by gambling is you can create a contract with you can create a contract on the exchange saying that, say for example, stock price of ICICI is currently 420 rupees, right? You can create a contract saying that the stock price will go from 420 rupees to 520 rupees, and you can create a contract, and then you can say if this contract is met, I can sell the stock at the original price at which I had created a contract. So you create a contract for some money saying that the price will go from 420 rupees to 520 rupees. You pay a small amount for this contract. You just pay 500 rupees to create this contract. And if your contract is a hit, meaning the price goes from 420 to 520, the exchange gives you the ability to sell the fund at meaning 420 rupees fund at a higher price at a 520 rupees. So this basically locks your money. So this is like placing bets. Okay, so in options there are two kinds of options. There is a call options wherein you can say the price of a stock will increase, and there is a put option wherein you can say the price of a stock will decrease. So from 420 it will go to 300 rupees. You can say that and make money. So this is how people make money. So 2008 crash, the recent COVID crash, what happened in March 2020, even though the market is crashing, but people are making money. How people are making money is because they come up with contracts. They say this stock price will go more 100 rupees down, and you create a contract and then you make money. If it goes 100 rupees down, you make money. If it doesn't go, you lose the contract money, the 500 rupees that you have given to make a contract. Clear? So this is the part of options, future contracts. Similarly, there are metal stock, there are commodities. So commodities are nothing but you can trade in sugar, you can trade in salt. You can just say price of sugar can go from 20 rupees per kg to 40 rupees per kg. You can say that. So these are basically commodity stocks. You have gold, silver, sugar, salt, all those commodities. And then currency derivative, not much profitable because currencies don't have a larger movement. Say, for example, you can say dollar. You can purchase some dollars and wait for 2-3 years for the dollar rate to increase. And so, yeah, so this is a combination of this market, and the technology that goes behind trading this is crazy. So we mostly use WebSockets. So no APIs are used here because every second, I would say every microsecond, the price of a stock, the price of a metal can change. So mostly WebSockets are used in programming all these concepts. So I have worked on a couple of trading projects. So we use a lot of WebSockets. It's a event-driven architecture. Okay, so you don't just do a database call and save a particular trade. An event is generated. An event is pushed into a broking mechanism. So brokers are nothing but something like Kafka or RabbitMQ. If you have heard of Kafka or RabbitMQ or read about it, what is Kafka or RabbitMQ? So this kind of structure is mostly implemented using an event-driven architecture. Whenever there is a trade or something, it generates the events. Events are queued, and the queue is processed sequentially. That's why sometimes whenever you do a transaction, it will not immediately reflect in your statement, account statement. Your credit card transaction does not immediately reflect because there is no direct database call that goes. It's all handled using an event mechanism. So yeah, these are the top stock exchanges in India. We have the National Stock Exchange and Bombay Stock Exchange. But yeah, the most popular stock exchanges over the world are Nasdaq. So Nasdaq is a crazy stock exchange. It has grown like more than I think 200 times from 2001 to 2020. So Nasdaq is a very popular stock exchange in US. We have the London Stock Exchange, which is again a very high volume stock exchange, and the Tokyo Stock Exchange. So NSE and BSE, NSE is ranked, I think, the 9th or 10th biggest stock exchange in the world. So these are some technologies that revolve around a fintech company. One is artificial intelligence, blockchain, big data. This is regarding the regulation technology. So again, compliance and regulation is a very big part. Open banking APIs and biometric. Biometric is to basically authenticate you for each and every transaction. So they use a lot of biometric data. Coming to, this is the biggest question of this particular era. So should banks fear fintech? So banks are getting obsolete. Okay, for example, this ICICI, HDFC. So they don't really have their own IT division. So ICICI Bank uses a product from Infosys, which is Finacle. That's their banking engine. So all these banks like ICICI, Punjab National, Axis, they all are in danger because there are a lot of small fintech players that are taking over their business. So we have like Apple Pay, Google Pay, they are all tapping into the payment space. So so there is a lot of disruptive technology that happens in the small sector. Someone was trying to ask.
Yeah, I had a question actually.
Yes, tell me.
So if you go to see how the banking scenario is developing in India, now there is rise of neo banks. The
Agreed.
problem that neo banks are facing is that they have to partner with the traditional banks itself for the back end. Front end, they can do whatever they want, but the basic limitation that they face is that RBI regulation that they have to be the account has to be created in a traditional bank, but that's not the case in US. The neo banks are standalone, then that too they are FDIC insured. It's the same way like how RBI insures the account. That is the biggest problem that fintech startups are facing in India because they need to partner with an existing bank for all the services.
Yes, exactly. And the reason why RBI is doing that is to basically safeguard the interest of the Indian population. See, India is not a rich country, okay? So RBI is taking all these steps just to make your money safer, okay? So they feel that the traditional banks that are operating in India are more safe than these online platforms that come into India. So neobank can shut down anytime. If neobank shut down, and if RBI doesn't have a regulation on top of it, your money will be lost. And we know that such kind of incident have happened in past in India, and RBI is now double cautious about it. So it's not just for banks. In fact, it is also for any retail chain. For example, Walmart wanted to enter India, but Walmart couldn't enter on a standalone basis. They were asked to partner with some local agency. That's why they tried to acquire Flipkart. It's with any platform. They have to acquire a local, they have to do a tie-up with some local entity to expand their business.
Yeah, but then the limitations of the existing bank automatically get transferred to the fintech startup also, right? Or the fintech company. The
Yes.
basic limitations, right? Because I've been using so many neo bank accounts now, like Neo. Then there's something called Fi Money, then Finin. I use almost all of these on the daily basis just to see how they work. But the same limitations that I have with my normal banking accounts are transferred to the same apps.
That's true. Absolutely true. But that is just to safeguard your interest. Okay, so if you just start investing money in them, and one fine day if you lose this money, then no one is there to help you. So there are regulations laid down by RBI to protect this capital. There are in fact a lot of regulations. So we just cannot bypass those regulations in India. But yeah, of course, if you see abroad, there are a lot of this fintech. So you don't even need to have your credit card or debit card. You can just open an account with any online player. It's more liberal outside.
They are raising money in billions of dollars from all these private equities every day.
Yes, that's true. In fact, the exchange. I am not sure how Zomato got in, but the exchange, that is
They changed the
any.
rules for loss-making companies.
Yes, exactly.
And only 10% is reserved for retail because of that law.
Exactly. So they have, so in India you have all this loophole. So as per SEBI, you are not allowed to list a company that is making loss.
Yeah, you need to show 5 years of profitability.
Exactly, perfect. You are well updated. So you need to show a 5 years of profitability. There are a lot of regulations around it. So, but somehow Zomato, which is making a loss of more than 2,000 crore, I think.
Yeah, but they changed the rules. Now MobiKwik also filed for a 1900 crore IPO because of that regulation. So even they can list.
Yes, that's true. But again, we don't know what is going to happen with these companies. They can collapse, in fact. And the public's money will be at stake.
Yeah.
So yeah, that's the sad side of it.
Private equity players made a killing by investing in it.
Yes, that's true. So even all these HNIs and all these big players, right? They will invest. So you will see a listing gain. There will be a huge listing gain. So it might open up on 200 rupees as well. But they will all withdraw the money within the first 1 or 2 weeks, and it will crash.
Yeah, but in the gray market, the premium also fell for the share because it's a 9,000 crore IPO. Such huge listing gains might not be possible. It
Yes.
might maybe 10-15%. I don't know what will happen.
Yeah, but even if there are listing gains, right? Who will make money from this listing gains? Retail players will never make money because retail players are not investing that much. As a retail player, you can just make, say, 10,000 rupees. But all these foreign investors or high net worth investors who invest like 2 crore rupees, they will just take this 15% listing gain and they will exit.
Yeah.
And once the stock comes down to its original price, it will never come up. So we need to be very careful about this. So RBI and SEBI, they keep on changing the rules just to benefit some of their customers or ties, but we need to be very careful when it comes to such kind of market. So yeah, so all these fintech companies, they are investing heavily in a technology so there are a lot of technologies that go behind basically a company from being a startup to getting listed onto a market. So a lot of things that you need to come up with. You need to come up with your exchange value. You need to come up with your trade coins. So there are a lot of things that goes into it. But yeah, you will understand if you join a fintech company that deals with listing of equities, it's a good journey to learn. In fact, there are a lot of things to learn. So yeah, I think this was my last slide. So if you have any questions on any of the slides, or you want to ask me something that will benefit you with your hiring, you can just shoot your questions.
I don't have. Hello.
Yes, I can hear you.
So I don't have a question to ask, but a point to what do you say? Ask you. Like normally the banks are used to before UPI. Normally the banks used to focus on what do you say, the big deals or big transactions that they used to make, right? But after the UPI came, now the banks started focusing. Main of the majority of the banking what do you say, power was transferred to the small transaction of 10-20 rupees. So what do you think is the future? Like, will the of the UPI? So what do you think will happen? Because most of the banking power is currently monitoring these small transactions, right? And as per you said, even if we make a big transaction, then AI will detect कि भाई यहाँ पे this banda is doing something fishy. We have to see it. So,
Yes.
what are your views on that?
It is. See, it is not that Banda is doing a big transaction, it is fishy. It depends on the background, okay? It depends on your background. If you are just spending 100 or 200 rupees a day for last 3 years and suddenly you do a transaction, that's when you are flagged, okay? But I don't think the focus has switched to smaller transaction. Okay, it's not that banks are making huge money on these UPI based transactions. Okay, banks are in fact making loss on this kind
Yeah,
of
exactly.
transaction. Okay, so
Exactly,
they
but
are
their
making
amount
loss.
of transaction is this amount to a certain higher level, right? Because there are so many people on day-to-day basis who are just transferring 10-20 rupees among friends.
Yes, yes, I agree.
They have no value to the bank. Bank is just expending its resources just to make the transaction happen.
Exactly, exactly. But that is how a revolution starts. So they are looking at a big digital revolution. They want you to make those 10, 20 rupees transaction. They want you to get addicted to it. It becomes an addiction. Okay. So just like how Geo said, okay, first 3 months free for you. Then they said, okay, more 3 months free for you. Was Geo making profit with that? No. They just wanted to make you addicted to that amount of speed, that amount of flexibility, so that you don't later, when Jio says, I am charging you 400 rupees now per month. Now you are addicted to Jio. You have that kind of speed, you have coverage, and you cannot change. So now what Jio has done? Jio has shut down the Idea. Jio has almost on the verge to shut down Vodafone. Airtel is the only player that is in the market. You have no other telecom players. So that's what bank is trying to do with you. So it is just the first step of revolution. It is a baby step. He's saying you want to send 10 rupees, send it as many times as possible. I will make loss, but you are getting addicted. That is what is more important than making money for banks. They are relying on your habits. And once you are habitual to this, then slowly how India is a developing country, okay? India will slowly move towards the economy that is there in Europe and US. So what happens in Europe? To keep your money in bank, they will charge interest from you. They will not give you interest. They will charge 0.5% of your money as a fee. So India is moving towards that. This is just first baby steps that they are taking with UPI and other things. Does it answer you?
Yes.
So yeah, your habit is more valuable, in fact, to the bank.
So building habitual products, like Neer Ayer says in his book Hooked, like it is very important, right?
Yes.
If you have, if you, it's just like WhatsApp, to be honest.
Yes.
If you cannot start a day without looking at WhatsApp.
Perfectly well said. So that's how they are trying to make you addicted. Else they have not shifted their focus to small transactions. They have definitely not shifted focus. It is just they want you to be addicted to digital payment so that you never touch cash again. That's the end goal.
It seems to be working with me, so
Yes.
I never have any cash in my pocket anyways.
Yes. So,
Only cards, and like Sagar said, I just issued my Fi card today. Very
Yeah.
good experience.
which card? Sorry.
Fi Money. There is a new bank. It has Fi Money.
Okay. Fi money. Okay.
It has. I received quite a big package, like
Mhm.
how Zomato delivers a food delivery. I received that big package, and they have provided stickers and a whole nice artistic leaflet book.
Yeah, this is just the beginning.
The debit
But-
card is free for lifetime. I don't know how
but-
they.
But you don't need debit card. So the whole thing is we are trying to eliminate paying with plastics.
The problem right now is without debit card you can't register for UPI.
That is a bottleneck.
Yeah.
Oh, okay. I'm unaware about without a debit card you cannot register for UPI.
Yes, because you need the last 4 digits of the debit card
Six.
as well as its PIN, right, to set a UPI PIN.
Oh, this is new. Okay.
After that, even if you lose the card, it's not a problem. But if you want to change the UPI pin, you need the debit card again.
Oh, okay. But yeah, the debit cards will again become virtual. So see, this is just a regulatory process that they have. But if you open if anyone has ICICI, so if you open a ICICI net banking account, you can start seeing all your cards there.
Yeah.
Even
So
Kotak 811.
Sorry, what did you say?
Even Kotak 811, they give you a virtual card.
Yes, they give you a virtual card.
and all of these neo banks that Sagar mentioned all are giving virtual cards as a mandatory thing. but they are charging you that there is a card called as Dhani card. So it charges you 80 rupees just to deliver the card, but it's always free. But you can
Okay.
always see the card online, right? You don't have to have the physical card with you.
Yeah, you don't need a physical card. And with this tone tech technology, the audio QRs, I don't think you will need cards anymore. There's a lot of revolution happening around payments. So payments are getting more and more sophisticated. It's a very niche field. In fact, if you have interest in finance and technology, since you guys are from a technology background, it's a very niche field. Companies just pay you any amount of salary to work on payment technologies.
But there is a catch. People like me and Sagar are not good coders. Like Prem is a very good, fantastic coder, but me and Sagar are not good coders at all. So we can manage up to SQL, Python, and what do you say, some kind of REST APIs. But apart from that, hota nahi hai coding. How do you tell? What do you tell us to do to get into fintech?
We are
Because
really
we are
passionate
interested in
about
fintech.
finance.
Yeah.
Yeah, so finance is, see, this is finance is like a lot of pillars. Okay, this is just one part, which is fintech. Fintech has like huge amount of investment, but the another part is analysis. Okay, there is
Data analytics.
lot of analysis that goes into whether a bank should take a particular trade or not. For example, the Atal Setu that is built, there are a lot of big companies that have invested money into it. Okay, so whether to invest money into that project or not, just to take that decision, there is a lot of analysis that go into it. So if you don't know coding, but if you are good in analyzing, meaning analytics or data manipulation, if you can come out with some statistics based on some previous data, historic data, or some facts, it's that is also a very niche field. Trust me on this. Okay, so these particular companies, there are a lot of companies which invest in stocks, like in Zomato. Only 10% was retail. Okay, 75% was institutional investors. Like there were like 28 institutions that invested in this. Like this decision is very critical. Like who takes this decision? These are the business analysts that take this decision. Very niche role. You don't need to know much about the technology. Of course, the technology guys will give you various products that will help you take this decision. But yeah, it comes with experience. You need to just enter into any investment banking domain or a fintech domain to understand all these scenarios.
If you have time, I had another question.
Yes, please go ahead.
So the thing is, in India, the lending is really a problem. You see how the NPAs are rising of the bank, and we are not lending enough. Our credit to GDP ratio is around 60%. China is 200%. It is over leveraged according to its economy in lending. So the problem is, see, if I'm a student, I get some pocket money from my parents. The bank won't give me a credit card, even if with a limit of 2 or 5 or 6,000 per month. They will never give. They will say, I didn't take a loan, I don't have credit score. But actually, I can pay the credit card. So there should be something done, like there is India Stack now. The India Stack has to be even upgraded so that it gets the entire information of the person who is like, they should know, like basically the government has to know the behavior of the person. Whatever he's doing, the data has to be given to the banks so that they can analyze, and on that they can take decisions, not only on the credit score.
I think it's tricky to understand this, meaning why that happens in India is, right. See, the currency, it is more on the currency side. See, in US and all, they'll just give you money. Okay, why is because I think US and China can just print money based on their GDP factors. Okay, so US just prints money, and it is a credit note. Have you read on the anytime, if you have seen the US currency, right? They have written that this is a credit note that is given to you. So they print money based on credits. Okay, it is something. It's like a loan taken from someone else, and they print this money. But that's not the case with India. So in India, to print a money, you actually need to have a gold reserve, or your GDP has to be actually in line with the global index for you to be able to print money. But it is changing, it is changing with this revolution, which I think they have done, decommissioning the old notes and coming up with a new currency. With that particular decision, now they have the ability to print more digital money. They have done some mess in that particular system. People
But
are more people are more focused on whether we eliminated the corruption, whether people were hiding money and now they are not hiding. It is not related to that, the demonetization which they have done. They have a bigger agenda with the demonetization. The bigger agenda is to print digital money. So when India prints a physical money, right, India needs to have a gold reserve to print that money. So that's why countries like China and US, mostly US and China, I'm not sure how it works with euro and Australian dollars, but mostly US and China, they just keep on printing digital money. So their countries are basically in debt. So if there is a world war, which is already happening, I would say COVID-19 is a bio war. Okay, it's already like a bio World War III. So if there is a world war, the countries like US and China, they will go extinct because they'll be in debt. Okay, but India will never be in debt because India has that much amount of gold reserves for which they have printed the money. So that's why this kind of system exists in India and it does not exist in more developed countries, because they just keep on printing money as a loan.
and the interest rates are also zero there because it's a deflationary economy.
Exactly, it's a deflationary economy. You cannot give interest to something that is already on loan.
Except China and US, most of the European countries are deflationary.
Yes, that's true. But US is also a deflationary. You see, US is rising because of technology. They have a lot of innovations with them. Like every innovation that you see, for example, the chips that you use in your laptop, the Microsoft Teams, what we are using, it's all American. So that's how they have their inflows. So we basically pay Americans for using all this technology. So that's how they are able to manage their debt. But that's not the case with Europeans and other countries. They will just crash.
There is inflation in US, but the growth is also there's an arbitrage of inflation if you compare. Like dollar depreciates 5% every year because inflation is 5% in India. But Japan, there is no inflation. They are printing money since 20 years now. There is 0% inflation there.
Japan has grown so much. Japan is, I think, a different. So if you look at the Tokyo Stock Exchange, it has never collapsed. From I think 2003 to 2016 or 17, it has never collapsed. It's a bull run. It was on a bull run.
Yeah, but if you go to see the 1980 level of Nikkei 225 is not even like it is 50% down from its peak 40 years ago.
Yes,
Nikkei 225 index.
Yes. They Japan, I'm not very sure what happens with Japan, but yeah, Japan is crazy. It's going at a very fast rate. That's true. Okay, so it was good discussion. I think it was good. So any other question? Any other questions related to any fintech
Hello.
topics or? Yes, tell me.
So now the lot of big companies are investing in cryptocurrency because of the value of the money is going down. So cryptocurrency is like it's like it will like in the future it will go up like a lot.
See, cryptocurrencies, it depends on the regulation that is put around cryptocurrency. Just 2 months back, RBI said cryptocurrencies are banned. So if you purchase something in cryptocurrency, you would get a notification. So cryptocurrencies are expected to basically replace the actual money, but again, it depends on what regulation which country is trying to put. Cryptocurrencies are more open in US and European markets, but in India, they are subjected to a lot of regulations. So I am not sure. I cannot comment whether it will replace or not. the technology that goes behind cryptocurrency is amazing. In fact, it is so good than the actual money, so it can replace it if 10 years down the line, but you cannot say. It depends on what regulations are put into place on them, because
Okay.
it's just a parallel market that runs.
Okay, to the students, I think Amar has got a lot of things lined up, and I know you'll have lots of questions. I also have a lot of questions, but maybe you all can write down your questions, and we can try to answer them somehow. So you can just write them and mail them to me maybe, and we can WhatsApp them to me, and then as and when I can send to Amar, and whenever he has time, maybe he can reply. Thank you very much, Amar, for this privilege of having you after so many years. It's great to see you. You have the same smile, the same voice. I can even remember your handwriting. What a lovely boy you were, and you're the same. Thank you very much.
Yeah.
And on behalf of this entire class, I hope we can have you again, very often in PCC, because we have learned a lot from you. I have learned a lot from you. Thank you, dear students. All the best. I hope most of your doubts have been cleared. And if there are still more doubts, WhatsApp them on the group which we have created, and we'll see how we take them from there. Thank you, Amar, once again.
Thank you. Bye.
Thank you. Yes. Thanks a lot.